stationery. Remember, we have stationery here. We have stationery owing, which is 79 plus 300. So this is what is going to P and L. Why this one? You see that it will also appear in trading and also appear in the balance sheet, and that's why I've told you earlier that any additional information will be treated twice. So 7962 plus 300, that is 8262. Then we have provision for bad debt. It is possible we have two bad debt and provision. Provision is also an expensive, and that is why if you want to prepare ledger for provision, you know I gave you some techniques in order to draw your trial balance. Now any provision for bad debt or depreciation must be credited in your ledger. So now we have a provision for 508. So provision is also an expensive. Then we have a provision for discount allowed. Provision for discount allowance. Remember, that one is a 941. It's also an expensive. 914. Then we have a depreciation. Depreciation is the wear and tear. So under it we have furniture, and I think we know that furniture and fitting, that is a 38. Then we have plant and machinery, which is 202. Plant and machinery, that is a 202. So having given this, then we want to get our net profit. We want to get our net profit. So let's add this together. This plus this plus this, that is a 21902. Now if you add all these and all the SSs together, you see that this is greater than this. So less this from the total of this, you have the net profit of 76748. So at the end of the day, we have 21,092. And then let me tell you another name for net profit. We call it earnings. Net profit. These are net profit. You see that net profit, when a company is moving on and is having profit every year, which is net profit, you see that it will increase your capital, and that's why you see we add our net profit to our capital. So that is the effect of profit in a business. When the business is making profit, then the company will keep moving. But if it is not making profit and is making loss at every time, then it's possible that the going concern concept will be threatened. And that's why what keep business going, which follows the concept of going concern, is when company is having profit at all times. But when the company is not having profit and it is having loss at the end of the day, you see that they will be threatening the going concern of the company, and the company will have to drive to close up and wind up at the end of the day. Having prepared the trading profit and loss account, then we'll prepare balance sheet. Balance sheet as at 31st December 2011. Make sure anything if you are preparing an account, you have to put the headings at the top. It attracts mark. So you rule it. This is a T format. Now looking at the balance sheet format, let's quickly go to our capital. And looking at the question, looking at it, we have a capital of 32,000. So our capital is 32,000. Then remember, you had your net profit. You had it. I told you that net profit, it increased the capital at the end of the day. So 6,748. If you add it, then we have 38,748. And you less drawing. When you are drawing, and when you are drawing from your capital. When you are drawing, the effect of drawing is that it will affect your cash, and it will also affect your capital. Now, we have two drawings. The first drawing is of which we've done it in additional information, is that cash of 4,000. Then another drawing. Both good drawing and cash drawing, they must be totaled. Most of the times you might not be given good drawing, that it is only drawings of cash that will be given. But here in this information, we are giving good drawing as well. So we add it together, you have 5,500. You can see it here in the working. So we had it, that is 33,248. Then we go to our current liability. Current liability, we have creditors. Under current liability, we have a creditor which is 4182. Then we have stationary owing. And that's where I told you that anything that has to do with owing, it's in the balance sheet. You can see that we treat it in trading profit and loss account, and it is going to appear in the balance sheet as well. So 300, you just put it there. Then we have income receivable. That one is also in arrears. So income receivable, you see that it appears here, and it will also appear here in the balance sheet. If anything arrears, owing or outstanding, they are liability to the company. So having done that, you add it together, and the total is 37750. And don't forget, the total of this side and total of this side must be equal. If it does not correspond, that means you did not treat. There are some items that you did not treat, where you have to retrace it back and do some necessary adjustment. Then on the asset side, asset claim side, in balance sheet we have asset claim side and we have a liability claim side, of which we've done the liability claim side. This is the asset claim side. Remember, we have a fixed asset, we have two assets, fixed asset and the current asset. Now we'll be going to land and building. You don't have any depreciation for land and building, because that one is 16,840. If you look at the trial balance, then we have a plant and machinery. Plant and machinery has depreciation. So that is 4034. Then you less depreciation for that year, which is 10%. So that is 202. You less it, that will give you 3872, of which it has been done here. Now, then we have another furniture and fitting. We have another depreciation. So this is the net book value. This is the cost, and you know the historical cost. You know, we are guided with a accounting concept. Every account that you prepare must be there is a concept that guides it, and the concept that guides this cost is a historical cost. That in any accounting that you are preparing, you must recognize the initial cost used to bought that items or any service that was rendered. So the cost is very essential. In the initial cost, which is the historical cost, is important in the balance sheet. Now, furniture, the cost of furniture is 7378, then less depreciation is 38. That is 340. You see that why are we depreciating an asset? You know, asset has a useful life. By the time you are depreciating your asset, because at the time you are using an asset, then the asset will be subjected to wear and tear. So you must adjust. Accountants are expected to adjust for the schedule your asset, so that those ones that are old, you replace them with new ones. That's why we have to depreciate our asset, so to get the value of that asset, having used the economic life of that asset. So you can see here that remember, it's always done on a straight line basis. We've been given the percentage which we use to adjust our depreciation. We've done that in the trade profit and loss, and it will also appear in the balance sheet, and that is 340. So if you add it together, it gives you 2012. Now our current asset, we have cash at bank. Cash at bank is an asset, is a current asset. Is a current asset because fixed asset. The reason why fixed asset is different from current asset is that when a company needs money cash within a period of time, they can